What's up, guys? Today we've got a few tips on improving your credit. These are just things I've learned over the years. You're welcome to add to the conversation, but I'm just going to share with you what I've learned that helps people improve their credit so they can take advantage of better interest rates on car loans, especially right now when rates are high. We're going to get started right now. Welcome back to the channel, guys. Now, first things first, I want to show you why having good credit is cheaper for you. So the reason why you need a higher credit score is because the higher your credit score is, the less you pay for money. So if you look at the screen, I've got, 740 plus. That's the cheapest interest rate you can get at 740 plus. So that is going to be where you want your credit to be. Over 740 is A plus. 720 to 739 is A, 680 to 719 is B, 650 to 679 is C, and 600 to 649 is D. Now, the thing is, it's like every bank and credit union has their own tiers. So this is just an example. This isn't the word of law. It's just an example. And as you can see, the higher your credit score, the less you pay for money. And they have a saying in the compound interest world: those who understand it, earn it, and those who don't, pay it. So if you are always over here in the D tier, you're paying all the interest for everybody else. You're in at 16% or whatever. I mean, that's really huge. It's double the amount of interest that people with 740s have. So you want to do what you can to work your credit score up. And in today's video, I'm going to give you a few tips what you can work on today to start improving your credit and inching yourself towards that A plus status. First thing we're going to talk about is available credit. So let's define this with these simple terms. If you've got a credit card with a $500 maximum balance, maximum available credit, that's your credit limit, $500, right? And you're using $400 of it every month and just making the minimum payment, that is the quickest way to get your score to go down every month. Every day it stays over 50% of that maximum amount allowed will impact your credit score negatively every single month. What you can work on is to try and keep that below 250. So if you're going to use it every month, try to think, I'm going to use it for groceries, I'm going to use it for gas, whatever. Just make sure you're able to pay that down every month so that you're not stuck making a minimum payment. And it's also ticking your score down every month. That's one of the fastest things you can do to get your credit score to jump, is pay down that revolving debt below 50% of the maximum allowed usage. So the next thing we're going to talk about is having late payments. So let's define this. We're not even going to talk about grace periods. We're just going to talk about late payments. Let's say you've got a bill that's $100 a month and you're late by 30 days. And then your next bill comes out, the next billing cycle comes out for another 100, and you pay that one. Well, you're still late 100. So you've got to get that brought back up to be in compliance with the loan guidelines. So having late payments or making partial payments, like if you owe 100, paying $80 isn't really going to help you as far as your credit score. It might help you with the debt you owe, but it's not going to help your credit score because they're going to keep reporting you to the credit bureau that you're late until it's completely caught up. So sometimes we may think, well, I'm only behind by a little bit, but they're reporting every month that you're late, causing your score to drop. So if you can, that's the second thing you should work on, is making sure anything that you have that's late is caught up completely, and moving forward, pay it early if you can. All right, let's talk about something for the parents out there, for the people who want to have better credit. I showed you earlier in the video what the scores look like and where you should be, trying to achieve, but people don't know how to get there. When you're 18 years old, 19 years old, you come out and you don't have a high credit, and you also don't have what they call a credit file. So it's one thing to have a good score. It's another thing to have a good score and an awesome, long, lengthy credit file that shows you've had years of repayment on installment loans. Revolving loans don't help as much. Think revolving loans are credit cards. Installment loans are cars and mortgages. So you have to have some installment loan history, 2 years plus, making payments to some institution that'll report consistently to really give you a solid, what they call, credit file. So when you're young, how do you do it? Well, one of the fastest ways to do it is use a co-signer. I had a co-signer when I was 23 years old, and it's just a fact of life. I plan on doing this with my kids. So we're going to add him to a lease when he's 19 so that he'll have a 3-year loan that's over $10,000 that's going to be building his credit every month and also building a file of installment payments over 3 years. I've done this with plenty of my clients, and it helps their kids get ready for the next level, which is not having a cosigner. So having a cosigner when you're 19 years old, dad and mom get on the loan with you on a lease specifically, because that car will be under warranty the whole time. And then making those payments on time for 3 years will help your credit immensely. And you know, those things that you can talk to about with your parents when you're 18 before you even need to do this, but I think is something that lots of people should look at. Another thing you can do is monitor your credit. There are services out there that you can pay for to monitor your credit. You can actually go right to Experian or TransUnion or Equifax and pay them. Any of the free services I'm not a fan of, because I don't think they report accurate data that you can actually use if you need to use your credit. So that's why I don't like Credit Karma or freecreditreport.com. Anything you're not paying for, in my opinion, is not going to really help you monitor your credit properly. Now, luckily, with the new technology and credit cards and banking, most of these companies like Capital One, Chase, they have these different tools that you can use and access if you have credit cards with them that will allow you to monitor your credit score along the way. It does two things. It allows the bank to monitor your credit so they can offer you more credit. It also allows you to look at it without having to pay for it. So if you have a credit card with Chase, if you have a credit card with Capital One, they have these free tools you can use that you can monitor your credit on. And it's very important that you take a look at those things. Now, some of the specific things you're going to be looking for are statement dates. So if you have a credit card that reports your statement every 15th of the month, that's when it's going to tell the credit bureau what your balance is on that day and report to the credit bureau. So if your balance is $500 and you are planning on paying down $250 to keep your score going up and you don't do it to the 16th, it's not going to help you. It's going to pay that credit card down, but it's not going to get reported. So the last thing they're going to report is you had available $500 and you were using $500. So that's going to knock your score down. So you want to find out when those statement dates are and make sure you're making those payments before the statement date, preferably a few days before, to give error a little bit of time so that you don't have to worry about it. But that's something that I think that can help your score go up if you're making those payments before the statement date. Another thing you can do, guys, if you have gotten yourself behind and you're looking at having bad credit for a while because you can't get caught up, there are companies out there that help repair your credit. You have to pay them. They're not a free service. However, if they have proven results and you can work with them to improve your credit, it's something you should definitely look into, because they have the skills, the tools, the resources to get all of this stuff done and get your credit moving in the positive direction and a lot faster than you doing it on your own. So guys, credit can be a touchy subject. I know we need to talk about it. I hope I was able to share with you some things that you could use. The biggest one is good credit allows you to pay the least amount for money, whether it be mortgages, cars, furniture, whatever you're buying. When you have really high credit, you will pay the least amount of interest on any loan that is available to you. So if you found this useful, please share it with your friends. Don't forget to subscribe to the channel. I'm Ronnie Haskins.